If you're looking to make a lot of money in the commodities, you buy the junior miners. You can also lose a lot of money, but
Yeah.
that's where you make a lot of money because they're leveraged to the prices of the commodities. Whereas gold may have doubled in the past 10 years, a junior that gets into gold finds an economic deposit, will see a many times multiple return on its stock, not just the double. So that leverage is inherent in the junior miners.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And I'm trying to learn how to start these episodes by not saying it's another exciting day.
Oh, it's really exciting. It's great to be here. We are thrilled. We are ecstatic because I'm going to learn from you about the silver market.
Well, I mean, that's why it's exciting. We'll talk silver. Of course, I was catching up on some of my news headlines last night. I didn't even know that the Fed had wildly expanded their QE package on Monday. Interesting. I don't know how you wildly expand something that already was unlimited. And then, Peter, maybe to kick off, because I have Peter Clausi of CBLT Inc., which Peter's going out finding the cobalt for everyone on the planet. So we're going to dig into that too. Although, again, I'd love to get your view on, I heard, again, they expand QE on Monday. Then Jerome Powell says on Tuesday he's concerned about the outlook of the economy and they might do aggressive action. What is aggressive Federal Reserve action when you've already printed everything?
I honestly don't know. I've been doing this for 30 plus years. And in these times, it's really hard to predict anything. We're up here in Canada, the sane part of the world, and we're having the same issues. We're printing out debt like you wouldn't believe. And where does it end? Is it being done well? Like, it's easy to criticize, but it's important to critique and to think these things through. What are the consequences for our children and our grandchildren? Will there be jobs? How do we create jobs? And at one point, do people start discarding human life? We're seeing it in the news already, where the economy is more important than life. No, it's not. Life is life. You only get one. There are lots of economies.
Yeah, I think that's a good point, and certainly something I'm actually really glad you brought that up because, certainly I'm sitting here doing a financial show, and obviously there's the part of that that's important. Yet I think a big part of it, I mean, I don't know, maybe you really want to have $10 million, but are you going to be miserable if you're short of getting there? So kind of balancing some of the human parts in there and also just enjoying life, I think is a real key to investing. So I thank you for mentioning that. Another thing you brought up there, though, that I have a question on, you said if they're printing money wisely, I may be not quoting you exactly, but is such a thing possible, Peter?
Well, I guess it depends on your view of government. Are you a big government person where government is there to be a nanny state? Or are you a small government person where the government is there to only do the critical things and then to get the hell out of business's way? And your view of government will shape how you think the money should be spent.
Mm-hmm. Well, is there an option C? Again, I grew up in New Jersey, learned to get good grades, go to school, fall for all the Wall Street nonsense
Yeah,
until the
cheer for
housing
Bruce.
bubble.
Cheer for Bruce
But,
and little Stephen.
it's like, as I've learned, I have yet, once I started studying Austrian economics and seeing a truth to this, I have yet to see any situation, I'm not saying it's not out there, but I've not yet found an example where government intervention, not once has ever in the history of the planet, solved anything better than a free market would. So is there an option for those of us who just would love the free market and not that monster size or small size government at all?
Well, my friend Keith calls me a socialistic libertarian, which means I can take care of myself, but I don't mind helping out other people.
Yeah.
I think government has to be the same way. You can't deal with items like diabetes or mental health in the private care system. There are some things the government has to do. The government has to run national defense. The government has to run a tax collecting service. So there are certain minimum things a government must do that the private sector just can't fill.
Yeah, although obviously here in the U.S. seems like they're assuming a little bit more than we've asked for. One other quote about the Fed this week that I just thought was stunning. This is from the Wall Street Journal. After firing its arsenal at funding markets, they're talking about the Fed last week to prevent a public health crisis from morphing into a financial crisis. Not sure that actually occurred as they stated there. The Fed said it would throw another kitchen sink this week at the credit markets that have broken down. I thought when they launched the QE program on that Sunday night a couple months ago, I thought that was the kitchen sink. I thought when they expanded it on Monday, that was the kitchen sink. So a lot of kitchens in the Federal Reserve building.
Yep.
But perhaps what people really want to hear, what is this going to do to the precious metals, the gold and silver markets, and some of these other commodities?
Well, as far as the kitchen sinks go, a lot of policies get announced and never get implemented. In Canada, the Liberal government here has announced many, many programs, and yet the money isn't trickling out yet because it hasn't been implemented and the policies have not yet been made into law. So it's easy to build a kitchen sink, but then you actually have to use it. Yeah. But the impact on gold has been and will continue to be dramatic. We're seeing gold around 1725 US an ounce. But when you translate that into other currencies, you're looking at all-time highs. Australia, for example, has an all-time high in gold just due to the currency translation. So for me, that means that non-American gold projects, non-American gold projects are de-risking themselves because the expenses are in local currency, whereas the revenue is in US dollars. So that provides greater margins for gold projects outside of the US.
Yeah, and as we can see here on the chart, looks like in the last couple of hours, gold has jumped a bit up to 1735, 1736.
Yep.
And actually, we have a lot of folks that get into the mining stocks in our audience, and obviously that's your area of expertise. So could you talk a bit about how some of these companies respond, the leverage they get at the higher price? Because you have a few factors there. Obviously, what you just cited with the currency factor that can go in their favor. Then you also have a lot of companies that, their margin grows as the price goes up, but also they start, there's projects that get turned on at $20 silver that aren't turned on now. So for folks, especially a lot of people just getting into gold and silver now and maybe new to the miners, if you could explain why folks go there for leverage if they think a move is coming.
Sure. If you're looking to make a lot of money in the commodities, you buy the junior miners. You can also lose a lot of money, but that's where you make a lot of money because they're leveraged to the prices of the commodities. Whereas gold may have doubled in the past 10 years, a junior that gets into gold finds an economic deposit will see a many times multiple return on its stock, not just the double. So that leverage is inherent in the junior miners. We saw it happen with the cobalt stocks in 2016 and 17. Cobalt ran from around $24,000 a ton, hit $96,000 a ton. It's back around $31,000 a ton today. So the cobalt juniors ran up and down in tandem with that.
Yep. And it seems like so far we've seen some movement, especially in the last month or so. A lot of, especially the gold, the bigger gold or the majors, some of them hitting new all-time highs, but seems like the juniors are lagging behind a little bit, haven't really moved, which I guess is somewhat typical for the cycle, right?
Right. The junior mining industry has been moribund since about 2012. I know gold ran to $1,800 US, but the majors then played M&A. And as you know, M&A is the sign of two things. Either it's the top of the cycle or it's the bottom of the cycle.
Yeah.
And 2012, 13, 14 was the gold topped out. The majors bought projects. They overpaid for them. The projects crashed. Gold crashed. And the juniors have not yet recovered from that. We haven't seen the trickle down. So usually what happens is the majors invest in the intermediates invest in the juniors, and they take a crapshoot on which ones will succeed, but they've got to put money out into the system or they don't have projects to fill the depletion later. We haven't seen that happening over the past 5 years. We've seen slightly increased M&A activity, but the juniors are starving for cash, and that's possibly why we haven't seen the move.
So do you think we'll see an environment where a lot of these bigger companies that simply need deposits to meet their obligations are just going to be buying mean, if we get $2,000 gold, are we going to see Newmont and Barrick go on a shopping spree to the mall?
Well, they did that back in 2012 and 13. You know, the big example is Kinross buying was it Redback in Northern Africa, paid about $7 billion for it, and then had to take a $6 billion write down. And that's not to fault Kinross. All the majors did it.
Yeah.
But there has to be a replacement, not just in gold, but look at the copper cliff we're facing. If we're going to electrify this world, we need to have about double the amount of copper that we're producing now. Electric cars require more copper. We need more copper everywhere if we're going to electrify the world. And copper production has been declining. So we need more deposits to be found. We need those deposits to be put into production. Putting a mine into production is not an inexpensive matter. Now, the rough rule of thumb is if you're going to shaft in Canada for a gold mine, your cost is $100,000 a meter going down. Rough rule of thumb. That's not an easy undertaking for a junior to take on. So only the majors can fund that. Only the majors have the credit worthiness to fund that.
Yeah, and it's interesting. I've read quite a bit about copper, and I know some folks say we have a structural deficit similar to what seems at times to be playing out in the palladium market. And of course, Peter, you knew I wasn't going to make it through a whole call here without saying
silver.
Word, so
silver. Say silver.
It's preceding myself. But I mean, again, it seems like another one of these ones. Currently, silver.
Sorry, man.
Close to the cost of production. I continue to wonder with all the leverage that's out there. Again,
but what's the ratio right now between gold and silver?
I think it's in the 110s or 120s. I don't pay attention to that too much as often. In fact, what I've found more interesting is the actual physical metal gold to silver ratio. Because if you go out and buy an ounce of gold and an ounce of silver today, not look at, the COMEX Mickey Mouse prices, that was, at least a week ago, was in the 70s. So
what is it historically average?
Well, for the last couple hundred years prior to the 1900s, it's amazing how it sat at 12 and 15, between 12 to 1 or 15 to 1, like a utility stock. I mean, the thing didn't move because there's probably some logic to it. I have a whole bunch of theories of why thing has there's been a lot of volatility in the ratio over the past 100 years, coincidentally, since the Fed came around. Make of that what you will. But I mean, the numbers don't make sense when you hear guys like Rick Rule. He talks about the Sprott Trust and says people are buying 1 to 1 or 5 to 1 in terms of actual dollars spent. So if the pricing ratio is 120 to 1 or 80 to 1, whatever you want to measure it, to me, that's always been, all right, just let that go on long enough. That'll sort itself out mathematically in due time.
Now, it's obvious the cobalt market's being manipulated. For the past 15, 16 months, it's been hanging around $30,000 a ton. And you think of everything that's gone on in the past 16 months, for a commodity not to blip up or blip down is just shocking. Do you think the silver market's being manipulated?
I think, in fact, my question for you, I was wondering if there was a futures contract in cobalt, because I guess I focus a lot on silver, and I think that might be the most extreme one. But I mean, my guess is that all of these base metals, it's like some of these, there's this great website where you can look at any of these commodities, see whether the banks are long or short the futures, and then you look at the chart and see it went up when they got long, they went down when they got short. So is that the same situation in cobalt as well? It sounds like you're saying.
Cobalt's a bizarre metal. There is only one primary cobalt mine in the entire world. It's in Morocco. It produces about half of 1% of the world's consumption of cobalt. Cobalt is a byproduct of nickel and copper mining. Roughly 65% comes out of the Congo with those vast tracts of copper. And China controls the processing of that. The cobalt gets shipped over to China. Once it goes over that big red wall, we don't know where it goes. But it gives China a lot of economic power, because without cobalt, your cell phone doesn't work, your electric car doesn't work, your scooter doesn't work, your laptop doesn't work. Cobalt is a brilliant, vital metal, and China controls it.
Yeah. And so is there a futures on it, though?
Yep, I think it's 3 months out.
Okay.
London Metals Exchange. But
Oh boy.
you, I don't know how you can't believe it's not manipulated. It hasn't moved in 16 months. It trades in this really narrow range. You think of how the world has, we had a booming economy, both north and south of the border. Things were rocking and rolling, didn't move. Then COVID hits, things grind to a halt, doesn't move. So it would take a lot of tequila to convince me that it's not manipulated.
Well, I mean, it would take something I can't figure out to convince you as well, because I'm in the same camp, and I've learned how to phrase these things. I know some people think market manipulation is a conspiracy theory. The counter I'd offer to that
No,
is
no, it's
just
just
look at.
capitalism. It's just capitalism in action. There's always going to be some skank out there who, if you can figure out a way to screw the system, will.
I mean, and I think that skank's name is the Federal Reserve, because there's like they openly manipulate the bond market and just call it policy and hope everybody plays along and sews costumes and does their parts. And I mean, it's like it's not real, which is why I left, and why I think you're completely right. I bet it's harder to find a market that's clean than one that isn't manipulated. And again, it's interesting what you're mentioning with cobalt, because I found the more esoteric the market, fewer people that even know it exists. Now, the more prone to manipulation it can be, but the point isn't to cry about manipulation. All right, if you know the market's rigged, if it's suppressed, and you figure out what's the right way to approach that, all right, maybe I don't know the timing, but you get a long term, these things do revert,
Yeah.
because if we don't have it, what happens?
I have a buddy named Donnie who's a commodities trader, trades out of his house. And he says that the only pure market is the commodities market, where all truths are priced into it instantly, and it's the most transparent of all the markets. I don't know if he's right, but he seems to do pretty well trading his own commodities.
I don't know that these things are being priced in instantly. And maybe that's always been the case. Maybe I think I'm clever because I find JP Morgan doing this or that. But I mean, the more I read about history, this probably always been going on in one form or another. And
Yeah, but now we have the internet and better means of disseminating data and information quickly. And although a lot of what
Peter, I lost you there for a second.
I'm back.
Forgive
Sorry,
me.
somebody was telephoning me and it interrupted my Zoom call and I had to blow them off.
Yeah, okay.
Sorry about that.
When you're the man with the cobalt, they come looking for you.
Hey, we've been busy lately because with the cobalt, we have gold properties, copper properties, nickel properties as the primary metal. So we have been extremely busy lately doing M&A. We announced the sale of a gold project last week, and people are sniffing around our other projects. So we've been extremely busy. I'm a lawyer. My main partner is an accountant. We run public companies, and we have been shockingly busy even during this bizarre time.
I could imagine. And Peter, I'll bet cobalt is a new market to a lot of people listening today. So perhaps before we wrap up, just give people an overview of the company, what you guys are doing. Are you out looking? Do you have it in hand, and what the risk profile is like? And just if they want to get more information on that.
Well, it's a junior miner, so the risk profile is always as massive, but so is the potential return. We have 11 properties scattered across Canada, covering a lot of the metals that are the primary metals. Then cobalt comes with it. We have some in British Columbia, some in Ontario, one in Quebec. The one in Quebec is drill ready, and we've done some drilling work at our main project in Sudbury, Ontario. Sudbury is world famous for being a mining jurisdiction. They're all exploration stage, but there's a lot of potential there. You've heard a lot of noise lately about the United States decreasing its reliance on foreign uranium and foreign rare earths. Canada's the same way. We don't want to have to rely on anyone. That's why Northern Saskatchewan is so important. Ontario is important. Canada's developing its own rare earths market, its own cobalt market, and those will protect us going forward. Every country needs to assure its own domestic security.
Yeah, and Peter, for folks that might be new to a project like that, you mentioned there is a lot of risk, and when they're out exploring. So let's say you're advising someone who's looking at something like that for the first time. Any like tips or advice you could pass along of good metrics to look at, or how does somebody evaluate a project where the data isn't as straightforward as perhaps an established company?
Well, that's a very good point. Investing in junior mining is risky, high return, and requires patience. Building a mine, building a deposit takes time. One drill hole doesn't make a deposit. Uh, you work with the geologists, you get out in the field. I love going in the field. Just a humble lawyer, I love going in the field because that's when I learn the most. Put my backpack on, take some samples, stumble around the bush. But to be a good junior mining investor, you need patience. You can't be a trader, you have to be an investor.
Yeah, that is certainly very true. Similar in silver, and I say this as someone who used to trade equity options, which is short term by nature. Um, and the metals, they just don't work like that. But if you can be the guy who has patience when no one else does, that's a pretty powerful investing strategy to start with. So I appreciate you sharing all this today, Peter. It's been fun catching up with you. Can you just let folks know perhaps the Twitter link, company link, if they'd like to get more information, anyone wants to follow up with you, how they can do so?
Sure, I'm easy to find. I'm at Clausi Peter, so my last name, my first name, and the company is at CBLT Inc. We try to keep things simple.
And we will have both of the links to those down in the description below. See that, Peter? I'm getting good with my YouTube tricks. They told me to point
exactly
the description when I say it, so I'm getting that. And what's that?
Hey, next time up, can we talk about the rare earths?
We sure can. I know very little about them, so it's nice to have an expert to dig into these fields with. Yeah, because a lot of these markets, by all means, people, please, trade in markets that you're learning about. But if you want to get into some of these markets, start learning about these esoteric ones, I do think there's opportunity in there. So Peter, thank you for joining me today. Great catching up with you again. And we'll look forward to doing this again soon, sir.
Thanks, Chris. Have a great day.